If you use your personal car in your business, especially in your S corporation, well, guess what? IRS allows you to claim that vehicle as a tax write-off against your business income, even though the car is under your personal name. Now, a lot of accountants don't really know how to do this properly, and they disallow and do not let their clients that are profitable business owners to take this deduction. They say, no, the car is under the personal name. I'm not really sure how we're going to take this deduction, and you're not allowed to. Well, in this video, I'm going to show you exactly how to use this tax strategy. Even if you're using your personal car for your business, your S corporation. And at the end of the video, I'm going to give you a tax strategy that you can literally just take it to your account and be like, hey, this is how you do it, and let's take this tax deduction. Ready? Let's get started. Hey, thanks so much for watching this video on my YouTube channel. My name is Boris Musheyev. I'm a CPA and a tax strategist. Every week, I release a tax strategy video here on YouTube. For you, the profitable business owner, my goal is to completely simplify this tax strategy so that you can understand it. At the same time, you're able to go ahead and implement this tax strategy, or at least take it to your accountant so he can implement it for you. But if you don't have a tax advisor, you gotta get yourself a tax advisor. So these tax strategies could be implemented for you in your business. Thank you so much. Don't forget to subscribe if you love the video. Let's go ahead and start saving you money on taxes. All right, perfect. And welcome back to this video. So in this video, we're going to talk about how can you write off your personal car that you use that is under your personal name against your S corporation. Before we continue how you can do that, we really need to understand what is an accountable plan, because an accountable plan is something that is allowed by the IRS. It's a mechanism that you can use to reimburse yourself personally from the business for the use of your car, including other expenses that you incur personally, but for the sake of the business. Now, accountable plan is a piece of document that is not filed anywhere with the IRS or your tax return. An accountable plan basically just a document that is filed with your files, and based on the accountable plan, it says that the business, your S corporation, can reimburse you, the business owner, who also happens to be an employee of the business, for any expenses, personal expenses that you incurred on behalf of the business. Now, when you have a personal car that you use for the business, you obviously incur a lot of expenses. You've got gas that you pay for, maintenance, repairs, insurance, interest if your vehicle is financed, or lease payments. So whatever the business usage percentage is of your business, you can every month reimburse yourself. Literally, you just write out a check from the business and you get that as a business tax deduction, and it goes to your personal account completely tax-free. That is an accountable plan. This is one of the main ways that you as a business owner can actually write off a personal vehicle that you're using for the business. Because when you try to put the personal vehicle, the title of the vehicle, under the business, it gets expensive, especially with insurance. So a lot of business owners, they don't want to do that. They're using their vehicle maybe 20%, 50%, or even 70% of the time for their business, and they want an easy way out. Just paying for these expenses directly from the S corporation won't be a deduction for you. But if you use an accountable plan in which you reimburse yourself for the business usage of that vehicle, that becomes a tax deduction. Now, I'll tell you a little bit about how we handle things in our firm, our tax advisory firm, for our clients. Majority of clients that use their personal car for the business, less than 70% business use, we use an accountable plan, no question about it. We track their expenses. We even calculate the depreciation to make sure that we include it all. And every month, the business owner gets a tax-free check from the business for using the car, and the business gets a write-off. Now, gets a little bit tricky when you've got a car, a personal vehicle that you use for your business that is more than 70%. So in our firm, what we usually do, we do not use an accountable plan at this point. We basically place the vehicle under the business, not the title of the vehicle, but basically for tax purposes, you can do that. You can record this vehicle as an asset investment by the business, even though the owner bought it. Now this is where you need your tax advisor, because your tax advisor will know exactly how to do that. And again, when we place it under the business, we don't deduct 100% of expenses, but what we deduct is whatever the business usage is. So let's say the business uses this vehicle 80% of the time for the business. Then 80% of the expenses from the business will be deductible. And there's a way to record it, including that depreciation. So it's really, really important to understand that if you've got a car that is under your personal name, you can absolutely deduct it as a business expense. Now, right after this break, we're going to talk about how can you claim depreciation on this personal vehicle in your business right after this break. Hey, thank you so much for watching my video so far. I wanted to give you a heads up. I've got this free PDF, 7 tax write-offs that every S-corporation business owner must know. The link to this free PDF is down below in the description. So to make sure to download it, that's it. Now let's get back to the video. All right, perfect. And welcome back. By the way, please do not forget to subscribe. If you're enjoying this video so far, please go ahead and share it so other profitable business owners just like you can use this tax strategy to save money on taxes. Now, let's continue. Let's talk about how can you claim depreciation of your personal car in your business. Before we talk about depreciation, I want to bring your attention to 2 types of methods that you can reimburse yourself, or really, I should say, 2 types of deductibility methods of your vehicle. So there's something that's called standard mileage deduction, meaning to say the IRS says, look, instead of you using the actual expenses of your business, what you can do is just reimburse yourself, again, using the accountable plan that we spoke about earlier, reimburse yourself for every business mile that you drive. So how much is the reimbursement? 67 cents per each mile, okay? So 100 miles, that's a $67 reimbursement, 1,000 miles, and you can do the math, okay? So the IRS says, look, let's keep it simple. You can reimburse yourself 67 cents per mile. Generally, what we do in our firm for our tax advisory clients, we use the standard business mileage rate given by the IRS if the business owner uses the personal vehicle less than 50% for the business. In most cases, and I'm not saying in all the cases, right? That's why you have to make sure you're working with a tax advisor. In most cases, the standard mileage rate of 67 cents per mile works better than actual expenses if the car is being used less than 50% for the business. And when you're using the standard mileage rate, there is no depreciation. You're not taking any actual expenses. You're just really reimbursing yourself for the mileage that you use for the business. Now, the second method are actual expenses. And that is, again, where you can use the accountable plan and reimburse yourself for actual expenses, including the depreciation. Now, the question really becomes, when should your accountant report this vehicle that you bought personally and now using it for the business? When should your accountant really report it under the business books? So I'll tell you again what we do for our clients, and we try to be in compliance with the IRS and make sure they maximize their tax deductions. Now, ladies and gentlemen, if you're not working with a tax advisor, I can guarantee you right now, you're most likely overpaying in taxes every single year. Not by this much, but by this much. What you need is a tax advisor. You need somebody that uses tax planning strategies, but not only tax planning strategies, but using those strategies and properly reporting it on your taxes. Now, in this particular situation, now coming back to what we do for our clients, if the client uses the car less than 50% for the business, in most cases, we use standard mileage rate. If it's between 50 to 70% of the business, this is where we kind of do some analytical, we basically get some analytical thinking going and do some calculations and see, hey, which is the better, the standard or the actual? Over 70%, that becomes very interesting, because what happens in most cases, actual expenses are more beneficial, because if the car is new and it was expensive, then you can also use a really nice depreciation deduction. Now, again, with an accountable plan, you can reimburse yourself from the business for that depreciation, or you can literally take this vehicle and record it on company's books. And your company can basically carry an asset, a vehicle, on the books, but again, only for the business usage percentage. It is absolutely allowed by the IRS as long as you keep track of what you use the car for. Keep track of your business mileage. So IRS says, look, if you want to deduct your car for the business, that's not a problem. We will allow you. because that's how the tax code is written. But you've got to stay in compliance. You've got to make sure you have a documentation of how many miles you used, what did you use the vehicle for the business, and guess what? All of the usage of the big vehicle, of your personal vehicle for your business will be tax deductible. Now, right after this break, we're going to talk about what is it that your accountant can do to help you better take advantage of this tax strategy right after this break. Hey, thank you so much for watching my YouTube video. Just a quick commercial break. If you like what you see, please like the video. As a matter of fact, share it on your YouTube so that you can help other business owners to save money on taxes. I would also appreciate it very much if you subscribe to my video. If you like, share, or subscribe, it really helps me with YouTube algorithm, where YouTube will really push this video to other business owners and they can learn how to save money on taxes using simple tax strategies that I teach with my whiteboard strategy. Thank you so much, and let's get back to the video. All right, awesome. Welcome back. By the way, if you haven't checked out the many resources completely free in the description of this video, go ahead and check it out. It's for you to download completely free. Now, let's continue. Let's talk about your accountant. First of all, like I said earlier in the beginning of this video, if you do not know what accountant plan means, speak to your accountant, and your accountant is probably not doing it, so just drop them, get a tax advice. That's my advice. But what you need to do is make sure if you love your accountant, if your accountant is your uncle or your aunt, right? You're like, I'm not leaving them again. Okay, no problem. Tell them, hey, I want to implement an accountant plan so I can properly reimburse myself for the use of the vehicle. Now, remember what I told you, okay? If your car is being used less than 70% for the business, you really need to figure out and make sure your accountant can do some calculations. Should you do the actual expense reimbursement or mileage expense reimbursement? If it's over 70%, what we do, and your accountant can do this also, is bypass the accountant plan, record the company vehicle on company's books, even though you paid for the car personally. I get this question a lot. Well, Boris, how do I pay for this car if it's going to be under my personal name? The truth is, it's best to pay personally, because then this vehicle can be recorded on company's books as an owner contribution. You, the owner, contributed this asset to your s-corporation, and whatever that business percentage is that you use, and remember, you've got to have a documentation of how much you use the vehicle for the business, then you can record it. You can take depreciation expenses for the business usage of the of the vehicle, gas expenses, maintenance, insurance, finance charges, lease charges, whatever that may be. All of this will be tax deductible for you in your business. Two things, again, let's kind of review. Either implement an accountant plan, or if you're really using the vehicle majority for the business, in our case, for our firm, that rule of thumb is about 70%, then we put the vehicle as a business asset under the s-corporation. Now, I just want to say thank you for watching this video. Please go ahead and share this video with your friends and family and any other business owners. If you like it, please subscribe. There are more resources for you down below to help you save money on taxes. Thank you so much. Until the next time.